there. So, switching gears a little bit, let's talk about some facts when it comes to disability insurance. Now, I have a whole class on disability insurance where we go into a lot of details with it, but I'm definitely going to have, we'll talk a little bit about disability and comparing it with Social Security disability as well. So we'll do an overview of disability insurance and workers' compensation, in this last bit. But when you're talking about disability, let's talk about the contract itself. First of all, what is the purpose of a disability policy? It protects our most important asset, and that's the ability to earn an income. If we're not able to earn an income, of course, that can be a very much of a financial strain. Even if, we're only going to be out, a few weeks, or most people do have a short-term situation where they're out a lot. Most people that are on disability will go back to work. So even if it's a short period of time, it can be very financially unstable. So let's talk about the contract first, and then we'll talk about Social Security disability. So basically, it's a contract that pays a monthly benefit. Now, this monthly benefit is usually 50 to 70% of your gross income. And this is more like for the individual policy. We'll talk about individual and group. And so the reason why it's 50 to 70% of your monthly benefit is, keep in mind, with disability insurance, you usually pay it with after-tax dollars, which means that if you are disabled, then you will get your money tax-free. And so insurance companies that do disability do not want you to be overinsured. In other words, you're getting more money being disabled than you would if you work. So it does pay a monthly benefit. It does follow an elimination period. This is a waiting period. How long do you have to wait before this monthly benefit kicks in? And it will depend on whether you have a short-term disability or a long-term disability. It's also a disability due to an accident or sickness. You fall down the steps. You have a car accident. I had a client that came in one day, his arm was in a sling, and he could not work for like 6 weeks. Fortunately, he had a group disability policy at his work. And, this kind of his job, he used his arm a lot. So that was an accident. That was something that his disability policy covers. Sicknesses, you have a stroke or you have a heart attack or you go out on maternity leave. Maternity leave is considered a sickness as well. The great thing about your insurance policies is they pay for partial, which is sometimes called residual, and total disability, meaning you can't work at all, but sometimes you can work some. Maybe you can work 20 hours a week. So it makes up for that reduction in pay as well. Whereas Social Security disability is going to be totally different. Okay, so you have, the insuring clause there when it comes to disability. So what I'm going to do here is go over to the whiteboard and show you a couple things for disability. So when it comes to disability, and we're talking about a contract from this standpoint, is you could have, a long-term disability, or you could have a short-term disability. Now, you can have more than one policy, but these are your typical disability policies. Now, remember, disability is all about accidents, that could happen, or sicknesses that can happen. Okay, and so you have this monthly benefit, so for example, it could be $5,000 a month, just to kind of put it in there. And then you have a elimination period. Now, your elimination period, if it was a long-term disability, usually this is going to be a 30-day, or it could be 60 days, 90-day elimination period. This is where you have to wait before the monthly benefit kicks in. Now, long-term disability, as far as the benefit period is concerned, it could be a 2-year benefit. It could be a 3-year benefit, 5-year benefit. It could go to age 65. A lot of times with especially like physicians in the medical field, they may have a long-term disability that will only be like 2 years or 3 years. Okay, so some occupations will have a very short benefit period, but a lot of your long-term disability policies will go to age 65. Now, with a short-term disability policy, Typically your elimination period here, could be, for example, it could be 0 days, it could be 7 days, it could go up to 30 days. Now, I had a group, and you see this a lot in your group employer group policies. And so I had a group short-term long disability policy, and the elimination period was basically 0 days. And I had, some employees that took short-term disability. For example, one of the employees had a foot infection, and so they had to have a surgery, and they were out for about 6 or 7 weeks. Again, that's a long time, for someone to not have an income. And I also had maternity, people had maternity leave, that type of thing. So you have a short-term, policy, and you can have a individual long-term policy. So for example, personally, I had this group short-term policy, and then also had an individual long-term disability policy to age 65. So again, the different types of disability policies that you can have there. One of the great things about disability insurance is it is a policy that if you're totally disabled or if you're partially disabled, you don't see that in Social Security disability. You have to be just totally, you can't work at all. Here, maybe you can work some, maybe you can work part-time, and so your monthly benefit would be $2,500, that type of thing. So again, just to kind of give you a visual of what these disability policies look like from that standpoint of numbers. Okay, so I'm going to go ahead and close the whiteboard here. And let's go ahead and continue with our disability here for just a moment or two. So with disability, this is something most people don't think about, but the chances you'll become disabled are definitely greater than you realize. There's a 1 in 4 chance that a 20-year-old entering the workforce today will become disabled. When you think about disability, some people think like long term, but most of us short term, hiking, skiing accident, that type of thing. I have a heart attack. I have a brother-in-law that had a heart attack, and he was back to work within 4 months and doing well. Again, recovered pretty quickly. But most of your disabilities aren't going to be till forever. They're going to be very short term there. So a lot of your disability policies in the insurance world are own occupation, which is what we want to see. If you cannot do your occupation, you go on disability. That's what we want to see, and that's one of the great things about having a insurance contract for disability. Any occupation is what you have with Social Security. If you can work, you're not going to go on Social Security disability. Now, there is a presumptive disability clause in your disability insurance contracts that basically say, hey, you're going to be considered totally disabled, not able to work at all, if you have the loss of use of any 2 limbs, if you have a total or permanent blindness, if you have a loss of speech or hearing, you're considered, totally disabled there. So we're talking about some different facts when it comes to health insurance. So we're talking about disability insurance. Disability, of course, is under that health insurance umbrella that you have there. And again, it doesn't fall under the Affordable Care Act because this is something they can, do pre-existing, that type of thing. So not every health insurance does do that. Okay. So when you're talking about health insurance, we talked about how there could be total disability, or maybe that person can come back to work, but kind of like a reduction in pay, fill in for that 50% there. Now, there is a clause in your disability policies called the recurrent disability clause. And what this does is, let's say, for example, Tom goes out on disability, and then he goes back to work, and then whoops, he goes back out again for that same condition. Instead of having to go ahead and redo his elimination period, okay, instead of having to do that waiting period again, if it's been within 6 months, okay, and it's for that same condition, then he doesn't have to fulfill the elimination period or the waiting period again. So again, if Tom goes out for disability and then he goes back to work, and then 2 months later he goes back out again, as long as it's been within 6 months, there is not going to be another waiting period. So you usually see that particular clause when it comes to your disability policies as well. That waiting period, the longer the waiting period, of course, the smaller the insurance premium. You're going to have a much longer waiting period on your long-term disability policies than you will on your short-term disability policies. Now, like I said, disability insurance doesn't go under the Affordable Care Act, right? And so there could be a what is called a probationary period. And so during this period, no benefits will be paid under the policy for a certain pre-existing condition. This was something that you had before the policy's inception. You don't see probationary periods a lot, but this could be a situation when, because we did write some disability in our office, where maybe someone comes into the office, and I had this happen once before where I had a client come in and they had a lump on their neck removed, and it wasn't cancerous, but of course that was something that was disclosed when they got the APS, the attending physician statements. And so what they said is, hey, we're going to put a probationary period. We're going to go ahead and insure her, but we're going to put a probationary period on here. And if she were to become disabled because of this situation for the next, 3 to 6 months, whatever that is, we're not going to pay disability for that. Okay, so they could do that. And basically it's to avoid, that adverse selection. Somebody says, oh, I better run and get some disability. I just became sick or I have this situation happening. Again, putting people in there that are healthy as well.